This is Peter from Game of Trades, and in today's episode, we're going to be focusing on the stock market and the crazy moves that we're seeing right now. Are we in that melt up phase that we've been talking about? If you're new here, make sure to subscribe to the channel. We make multiple videos a week on the stock market and on other opportunities that we see to make profit. Shout out to Squarespace for sponsoring today's video. We have the S&P 500 trading at all-time highs. We have the NASDAQ breaking out above its price channel with almost no resistance above it. So what's going to be happening next? We're going to be covering the details in this video, starting by looking at the S&P 500, so the broad stock market in detail. We're going to take a look at the short-term structure in the price action. We're then going to take a look at a couple indicators to see what kind of market environment we're currently in. Then we're going to take a look at the dollar and bonds and try to make sense of what's going on and the next potential direction. And after having covered the short-term picture on the stock market, I'm going to be discussing our long-term outlook with you guys because that is important to keep in mind. So without further ado, let's get right into it. This is the technical picture on the S&P 500, right? We've been looking at this price channel for quite a while. In fact, we had a beautiful trade setup from this backtest right here that we posted back in November, I believe, on GameOfTrades.net, and we've been following that price channel ever since. And we've been talking about the bullish structure on the S&P 500 throughout this entire period. So as long as the stock market is in a bullish structure, you're not looking for downside. You're not looking for a top. You're looking for downside once that picture starts to break down. And that was starting to become the case right here. But the S&P 500 managed to snap back straight above. And in fact, that was a bear trap scenario, right? Where you've got a stop loss raid through these levels. And then the S&P 500 snaps back. You've got a short squeeze and a beautiful rally. So that's exactly what happened. And we're back in that price channel and back in that bullish structure. So short term, strictly from price action, we're not looking at anything else right now. Strictly from price action, it's looking good. Now, objectively, what's the next direction for the S&P 500? We're at the top of this channel, right? So we're at resistance. So objectively, people are going to be booking profits here. In fact, that was the last target on our trade from this entry right here. The last target was at around 3,900 points. So that's what we believed was a nice final target for that trade. So around a 11% profit on that trade. So people are going to be booking profits at these levels, at this resistance. You can also see the S&P 500 is near that overbought reading, right? We had a couple of those recently. One right here, 7th of Jan, that was at the top of the resistance. Right here, top of the channel, also overbought. And right now we're seeing that same reading at the same resistance. I don't like when things get too repetitive on the stock market, but that is our bias right now. Our extreme short-term bias is for a small pullback. And on that pullback, you can look for some buying opportunities. So I'm going to extend this trend line right here. If we see the S&P 500 come back down here, would that be a buying opportunity? Absolutely. Now, what happens if we don't get that move down and we actually see a breakout above this price channel? Is that possible? Absolutely, right? Anything is possible, especially in the highly volatile environment and extremely high risk and high liquidity environment that we're in, right? We've got a lot of money flowing around the stock market. Look at what's happening on the small caps. This is just absolutely unprecedented. Is this good? Is this something I want to see as a long-term investor in the stock market? Absolutely not. That's why we're not invested in the stock market. And you can check out our articles at GameOfTrades.net on our long-term view on asset classes. We're bullish on precious metals, on cryptos, on emerging markets. But long-term, we're trying to stay away from these kinds of parabolic moves. I mean, we're taking advantage of them in the short term, right? We're making trades, but that's with precise stop losses and targets, but we're not putting our capital in US equities right now for the long term. That's just not something that we're doing, looking out 5 to 10 years, which is what you want to do with your investments, is look out at least 4 or 5 years from now, not just a few months. I mean, a few months, the stock market could be a lot higher from now. 4 or 5 years, not so much. So I also want to take a look at the US 100. So this is the NASDAQ 100, also looking extremely healthy short term, right? Bullish price action. It's recently made another higher high right here, and it's above this line of resistance. So we were looking at this price channel, and I'm going to show you what I mean on the longer term chart, right? This was the price channel that we were looking at on the NASDAQ 100, broke out backtest, and there it started to trade within a smaller channel. And recently what happened, we broke out, and this is where we really could see some crazy moves on the NASDAQ 100. So short term, again, extremely bullish on equities. But now let's take a look at some of the risks short term, right? Because that's an essential part of trading. You need to have your short term thesis. You need to know what your fundamental or technical case is, but you also need to take a look at your risk. So if you're bullish on equities right now, what are the charts that suggest downside on the stock market right now and that you need to be looking at? Not necessarily fully taking them into account, but definitely considering and watching them. You don't want to be blind to the opposite side of your trade. So one of those risks is the dollar. And that's something we talked about in, I believe, one of the last YouTube videos, where we talked about the US dollar breaking out above this big downtrend line resistance right here. And you can see what's happening right now. We have a beautiful breakout here. Breakout and backtest. So what does that mean? For now, it doesn't mean much. It really depends on what happens next with the dollar. If we resume off this trend line here and we hold that trend line and we see a nice V-shaped reversal off that backtest, and DXY manages to get back above 91 points, right? That's the level to look at, 91 points. If it breaks back above, that sets the dollar up for a nice move up to 92. So that's something to watch. If you're long on equities, you should be watching the dollar. But if it fails to get back above 91, right? If it does something like this, that's bullish for equities. That's bullish for precious metals. It's bullish for assets, because that means that the big downtrend that we've been in on the dollar is still intact, and we're looking for more downside, right? Because remember, the dollar is an inverse correlation to equities. That's what was the case throughout this entire period. Now, recently, we had a dollar breakout, but equities didn't go down that much. So perhaps that correlation is breaking a little bit. That's something that we'll be looking at closely in the next few episodes. So again, make sure to subscribe to the channel for more episodes like this, and make sure to like this video if you're so far enjoying learning something new, if you appreciate the style of the technical analysis that we're bringing here. So we're closely looking at the dollar, and I want to say we're in no man's land, right? Because we're in the context of a bearish trend, right? We have a long-term bearish trend, but we've recently had a breakout. So we've got two big forces, a long-term bearish trend and a breakout, working against each other. And we're in between those two trend lines, right? Between this trend line and this level of resistance. So once we break past one of these levels, that will probably give us the next big direction. Now, the problem with just looking at that is that you can see a backtest go on for quite a while, then have a nice bounce, and then continue on. And that kind of price action would not be surprising on the dollar, right? It's been extremely weak. So although the technicals say it's backtesting and then you see a small bounce, it's still in the context of an incredibly weak dollar. So the point that I'm trying to make is that we still have a bearish bias on the dollar as long as we're below this 91 point level. Because if the breakout happens, it needs to be now. If it's not able to get back above 91 within this week or the next, then we're likely going to see more downside on the dollar, and that could put some nice upwards pressure on equities and precious metals in the short term. Now, before I finish this video, I quickly want to take a look at the Wilshire 5000 to GDP ratio. This is something that we've taken a look at before a few times on this channel. It gives you a measure of how expensive the stock market is relative to the economic output of the United States. And right now, it's extremely overextended. Is that something that's surprising? Absolutely not, right? We have a lot of speculation and a lot of debt, but not a lot of growth. So we've got a stock market that's pricing in an incredible recovery, but the problem is this recovery hasn't materialized just yet. So it's an incredibly speculative market, and that's why we're seeing the Wilshire 5000 to GDP ratio absolutely explode. So what's the best and worst case scenario? The best case scenario, we see the GDP catch up to the Wilshire 5000 price. But that would mean the stock market would need to stop rising for the next few years, and we see a rise in GDP. So that's the best case scenario, and that's why we believe that although in the short term we're in a very risk-on environment with high liquidity and high speculation and everything's going up, but looking at the yearly time frame, we don't think these gains are sustainable just because the economic output actually needs to catch up to the price, right? So there can be very large disconnects between fundamentals and the actual stock market for quite a while. That's why this is continuing on up, but eventually that growth does need to materialize to justify those prices. So that brings me on to discuss the worst case scenario, and is that the growth does not materialize, in which case we would see a large drop in the stock market. Now, that's not something that we're predicting or that we're calling for. We don't pretend to be experts on exactly what's going to be happening with GDP, whether we're going to see a full recovery or not. All we can do is allocate our capital properly, and we're just not satisfied with the best case scenario, and we're very scared of the worst case scenario, right? Best case scenario, the Wilshire 5000 stays flat and GDP catches up, and worst case scenario, GDP doesn't catch up and Wilshire 5000 comes back down to reconnect GDP. So we are putting our capital in other areas, whether that is around the world, right? Global markets. We do think that the US markets are overpriced. We have a huge bullish case for precious metals that we talk about with our members all the time. Same thing for cryptocurrencies and commodities as well. So if you're interested in all that, don't hesitate to check it out. Check out our website. We do have a free trial for the pro version, so you can sign up without paying anything and check out the service that we give to our members. Now, that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time. Squarespace gives you a powerful and beautiful online platform from which to create your website. Stand out in any inbox with Squarespace email campaigns. You can add online booking and scheduling for your classes or your sessions to your Squarespace website easily. Refine your email strategy with real-time campaign and website analytics from one source, and learn what content leads to higher engagement. Go to squarespace.com for your free trial, and when you're ready to launch, go to squarespace.com/gameoftrades to save 10% off your first purchase of a website or a domain.